So thank you for joining me today at the Federal Employees Group Life Insurance Program training event. My name is Martine Mason-Martin, and I am the point of contact for the FEGLI program. My office is located within healthcare and insurance, and we are ultimately responsible for the overall administration of the FEGLI contract. I'm joined today by Kathleen Healy, who often works on the FEGLI program with me. And Kathleen has kindly agreed to help with the questions that we have, and we're hoping to address those at the end of the presentation. So the presentation today is not very long, but we do want to allow about 5 minutes or so for questions at the end. So please feel free to leave your questions or any of that at the question and answer feature above. So now that we have the introductions out of the way, I'm going to turn off my camera and start the presentation. Please feel free to leave in the chat if you cannot hear me or you cannot see me, and we'll try to take care of that as best we can. Okay, so without further ado, I'm going to start the presentation. Okay. All right, so before we jump into the meat and potatoes of the FEGLI program, I wanted to spend a few minutes on the responsibilities of both the employing office and the Office of Personnel Management. And actually, in addition to that, the Office of Federal Employees Group Life Insurance, also known as OFEGLI. Okay. We're going to start with the Office of Personnel Management's responsibilities, which includes the administration of the contract with MetLife. OPM proposes statute changes, writes regulations, sets premium rates in consultation with the Office of the Actuaries, decides when to hold an open season, and provides guidance to agencies as it relates to different operational and policy issues. OFEGLI, which is the FEGLI contractor, is an administrative unit of MetLife. It is not a government agency. And OFEGLI is responsible for the adjudication of claims, arranges for conversions in the event employees are given conversion privileges, provides guidance on designations on the SF 2823 or trust documents, evaluates certain requests, which includes employees' requests to enroll based on medical information, of which they will use the SF 2822, which we'll discuss later, or an employee's request to receive living benefits. So this form, the FE8, is not published on OPM's website, but employees, if they have a terminal diagnosis of where they have 9 months or less to live, will complete the form and submit to OFEGLI for review and approval. So this last bullet is extremely important, and I cannot stress this enough, that OFEGLI has no records on living employees, annuitants, or compensationers. It is extremely important that both the employing office or OPM Retirement Services provides documentation necessary for the OFEGLI contractor to timely pay FEGLI benefit payments. Okay, and now we're at the employing offices or agencies' responsibilities. So some of the responsibilities for the employing agency include processing actions such as new employee actions, open season elections, qualifying life event changes, processing of designations on the SF 2823, process assignment forms, the RI 76-15, process court orders, and also to process reservist elections. The employing agency also should certify coverage for the various reasons, including separation, end of 12 months in pay, or in non-pay status, retirement, or the death of an employee or eligible family member. The employing agency also withholds premiums and sends those funds to OPM and provides expert guidance to employees on a host of topics, including how they should prepare going into retirement. Okay, so now that we've discussed the responsibilities of both or all OPM, OFEGLI, and the employing agency, we'll get into the types of insurance offered under the FEGLI program. Okay, so as of now, there are two types of insurance, one being basic insurance, and then the other being optional. So there is option A, which is considered standard. There is option B, which is additional, and option C, which covers the lives of eligible family members. So for basic insurance, is considered the first level of coverage that we have here. This covers the lives of the employee, annuitant, or compensationer. So you don't see it here, but in order for employees to elect any optional insurance, they must elect basic first, okay? And so coverage amount for the value of basic insurance is based on the employee's annual rate of pay, rounded up to the nearest $1,000 plus $2,000. So an example here would be the employee's annual rate of pay is $47,100, rounded up to the nearest thousand, which would be $48,000, plus the $2,000, which would equal a basic insurance amount of $50,000. Okay. For basic insurance, employees pay 2/3 of the cost, and the government pays 1/3 of the cost. Basic is free for postal employees, and the benefits for basic insurance, as well as others, are payable regardless of the cause or location of death. Okay. So for option A, which is standard coverage, as I mentioned before, you must have basic insurance in order to elect option A. Option A covers the life of the employee, annuitant, or compensationer and offers $10,000 of coverage. Option A can also pay up to $10,000 in accidental death and dismemberment benefits at no additional cost. Okay, we have option B coverage, which is additional coverage. And again, you must have basic insurance before you elect option B coverage. And option B covers the life of the employee, annuitant, or compensationer. So under this coverage, employees can elect from 1 up to 5 multiples of option B. Each multiple is equal to the annual rate of pay rounded up to the nearest thousand. Okay, so in this case, you would not add the additional $2,000 like you would to calculate the basic insurance amount for basic insurance. Okay, option C coverage, again, you must have basic before you can elect option C coverage, but this is for your family, so eligible dependents under this program. So if you have option C, it will cover the lives of any and all eligible dependents, and this includes a spouse and eligible children, and we define this under the FEGLI program as unmarried dependent children under age 22, with an exception for children/dependents incapable of self-support. Under option C, employees can elect anywhere from 1 up to 5 multiples of option C. Each multiple covers the life of a spouse for $5,000 and each eligible child for $2,500. So an example of the maximum amount an employee can insure the life of their spouse for is $25,000, which is $5,000 times the amount of multiples. In this case, it would be 5. And for eligible children, it would be $12,500. Again, the amount of multiples. So it's 2,500 times 5 multiples. Okay. Option C automatically covers all eligible family members for the same premium. The employing agency nor OPM maintains a list of every employee's eligible family members. This is incredibly important because a lot of times employees will continue to pay for option C premiums when they no longer have eligible family members. So either they got a divorce or their children aged out or their spouse passed away. It's important to remind employees that they should regularly check their FEGLI coverage as well as their other benefits within the federal government to make sure that the amount of coverage that they have still meets their needs and is a reflection of their life at the time. In the cases where employees no longer have eligible family members, option C premiums are refundable up to, or let's say back to the date of which they no longer had eligible family members. So in a lot of cases, they would be paying a lot of premiums for a number of years sometimes. So it's very important to share and educate them on that. Okay, so we're going to move to the initial election and waiver of FEGLI coverage. Okay, so to be eligible for FEGLI, you have to meet several different criteria, but to generalize it, most federal employees are eligible. So unless they're excluded by law or regulation, there are some common exclusions, and even to those exclusions, exceptions may apply. This list here is not all inclusive, but are examples of more common ones, such as an employee whose appointment is limited to 1 year or less, employees who are intermittent in their service, as well as other employees who are employed for an uncertain or temporary period or brief periods at intervals, or employees who are expected to work less than 6 months in each year. And an exception to this would be some pathway program interns. So if an employee is interested in enrolling in the FEGLI program, if they're new to the federal government and they are eligible, they are automatically covered on their first day in pay and duty status unless they waive the coverage. No positive election is needed, and that basically means they do not have to fill out the SF 2817 to elect basic coverage because that should automatically be given to them. If an employee would like to elect optional coverage, and this is if they're new or newly eligible, they may elect any or all types of optional insurance without any proof of medical insurability. So they do not require physical, they do not have to submit an SF 2822, which is the request for insurance form. But if an employee would like to elect optional coverage, they would need to complete the SF 2817, which is the life insurance election form. Employees will have 60 days to elect any new coverage and must sign for each coverage they would like to elect. There are some cases where agencies have electronic methods to accept these FEGLI elections, and so it's, of course, share that with your employees so they understand the process and can do so in a timely manner. Waivers of FEGLI coverage. So for instance, if an employee does not want basic insurance, since they are automatically given the insurance, they must file the SF 2817 and waive the coverage in the waiver block, which is part 5 of the form. Okay. If an employee submits the SF 2817 waiving all life insurance or even just basic, within the first pay period, no premiums should be withheld. Okay. So on the form, if an employee does not elect optional insurance, that is considered a waiver of optional insurance. Any insurance not elected on this form will be considered, again, as I said, waived. That also includes basic, so just make sure they sign for all the coverage that they want to keep. So in the event an employee would like to cancel or reduce their FEGLI coverage instead of elect new coverage, they can do so at any time. Through this process, an employee can cancel a type of coverage, they can cancel some multiples of coverage, or they can cancel all coverage. Employees can submit an SF-2817 or its electronic equivalent, electing only the coverage they want to keep. So again, it's very important to actually provide guidance and walk them through that and remind them to make sure to sign for the coverage that they would like to keep, because again, it will be considered waived and canceled otherwise. So how does one elect more coverage? So there are three main ways to do so. Okay. One being during a FEGLI open season. Two, providing proof of medical insurability by undergoing a physical exam and completing the SF-2822. Or if an employee experiences a qualifying life event, they will be allowed to elect coverage. So it's important to note that only employees can elect coverage. Annuitants and compensationers are not eligible to do so. Okay, so a FEGLI open season, as of right now, they're held infrequently. So the last one was held in September of 2016, with all of those elections becoming effective the following year, which was October 2017. So FEGLI open seasons are actually held few and far between, and as of right now, there are no immediate plans to offer another one, but OPM is consistently looking at whether or not it is appropriate to do so, and will announce it if necessary. In addition to the fact that a FEGLI open season is held infrequently, when employees are allowed to elect during open season, they can elect coverage with no medical exam, and they will not be asked any health questions. Okay, so this is an abbreviated process. OPM is responsible for announcing details of upcoming open seasons in advance on our website, so stay tuned. And pay and duty status requirements do exist for some of the coverage, and as I mentioned, in the first bullet, effective dates would most likely be a year after the election is made. Okay, so in the absence of a FEGLI open season, employees thankfully can elect coverage at any time by providing proof of medical insurability, and this process will allow employees to elect basic, option A, and up to 5 multiples of option B. Employees cannot elect option C using this process. And in order to be eligible to submit this request, there has to be at least 1 year that has passed since the employee last waived basic, option A, and or option B coverage. If they meet these requirements, then the employee would use the SF-2822 request for insurance form available at that website. So it will be on OPM's website under Life Insurance tab. For the 2822, employees will complete part of the form. The employing agency will also complete part of the form, and the medical provider will complete the last part and mail it directly to OFEGLI. It is OFEGLI that determines if the employee is insurable. and they will notify the employing agency if indeed the request has been approved. Okay. So if an employee experiences a qualifying life event, which we define here as marriage, acquisition of an eligible child, divorce, or the death of a spouse, then they will be able to elect FEGLI coverage. So if that indeed does happen, employees will have 60 days after the date of an event to elect any coverage FEGLI offers, including option C. So, just to highlight this, outside of a FEGLI open season, the only time employees can elect additional FEGLI coverage is by experiencing a qualifying life event. In order for employees to elect any optional coverage, they must have or newly elect basic coverage at that time in order to process that action. Okay, so we've reached the part in the presentation where I want to focus on two main areas that present some challenges for FEGLI enrollees. Specifically with breaks in service, employees can separate or have traditional breaks in service for a number of reasons. For FEGLI and the program's purposes, we've separated it into 3 different time frames, and we're hoping to convey specifically how to treat the return of the employee as it relates to breaks in service to hopefully reduce any errors. So having said that, we're going to start with the first break in service, which is fewer than 31 days. So in this case, new elections will not be allowed for employees. Okay, so when the employee returns to service, the coverage that they had before their break in service, or if they went to non-pay status, will be reinstated. It will be the same as before they left. Okay, designations and assignments will still be valid, and no changes can be made. If an employee has a break in service of 31 to 179 days, they still cannot make any new elections. And the coverage that they had prior to their break in service will be reinstated when they return to service and are in pay and duty status. Designations and assignments may be canceled under this circumstance. All right, break-in services of, break-in service of 180 days or more. This will allow an employee returning to service to make a new election. So the way it would work is the employee would return to service in pay and duty status and receive the same coverage that they had prior to leaving. However, they will be allowed to make changes or elections, reduce their coverage or increase their coverage based on their own individual needs. Okay, so designations and assignments are, or may be canceled, sorry. Okay, so that leads me to the next kind of really important topic here. So under deductions occur when the payroll office withholds too little or no money from an employee's pay. This actually represents an overpayment of salary to the employee, as coverage would have been payable in the event the employee died. Incontestability does not apply here, and this is why this is very crucial. It has huge implications for the employee in the event actions are not recorded or processed, and then they have huge financial liabilities that they have very little remedy for or recourse, which we will discuss in a little bit. In my experience, there's been three most common errors related to under deductions. One being the employee is not enrolled in basic insurance when first entering pay and duty status. So as I mentioned earlier, hopefully you remember it, basic insurance does not require a positive election, which means that they automatically get to receive the coverage, but they do not have to complete the SF 2817. So if they do not receive this coverage upon entering service, they can go for a number of years without knowing it and have quite a huge financial burden as a result, because again, benefits would have been paid in the event they passed away. The second most common error that we see is the employee's elections are not recorded during a FEGLI open season or after submission of the SF 2817 to their employing office. Now, this can happen under several different circumstances. So with the FEGLI open season, it's pretty straightforward, and that does not happen very often. But with submissions of their new forms to their employing office, they may change agencies and think that, when I say they, I mean the employee, they may believe that the change in agency qualifies them to make new elections under their FEGLI coverage, which is not the case. So if they're moving from one eligible FEGLI position to another, they are not allowed to make any changes without undergoing the proper process. So it's not a qualifying life event. So we see that a lot where they go from one agency and then they're only given basic, and they think that that is correct because they think that that is, quote unquote, a new agency to them. So hopefully that makes sense. In addition to that, we also see where an employee submits their form and, through just regular human error, which we're all human, some of the coverage is processed and others aren't. So these are some of the more common ways that this happens, and hopefully it's something that we hope to address in the future. The third type of under deduction error is the break in service issue. So it's a misinterpretation of how employees should receive coverage when they return back to service, which we just briefly talked about. Okay, so to drive the point home, I want to provide a couple examples just to show how this happens and also provide some solutions to how to deal with it. So example one has an employee who is hired into a FEGLI eligible position. The employee did not submit an SF 2817 life insurance election form. This employee is automatically eligible for basic insurance, but the employing agency erroneously failed to enroll them or to withhold premiums. Several years later, the employee dies and the agency discovers the error. The agency should certify the basic insurance and send the money to OFEGLI and recover the premiums from the last paycheck, lump sum annual leave, or the employee's estate. Okay, so this one is kind of what I talked about briefly. Again, it could be several years before this error is caught. So, in a couple of slides, I'll discuss some ideas for potentially preventing this from happening. Okay, this is a long one. So example two has Dave, who has basic and option A coverage. During an open season, Dave newly elected basic and 5 times option B. 7 years later, the employing agency conducts an audit of Dave's coverage and discovers they did not process the option A cancellation or the newly elected 5 times option B coverage. Dave has now, at this point, basic insurance, option A, and 5 times option B. Dave has option A because incontestability applies. Dave had erroneous option A coverage for which he paid premiums over time. And so essentially, incontestability is when you pay for the premiums up to 2 years. So at that point, it's considered your coverage or the employee's coverage, and since they pay premiums for it. So Dave also has 5 times option B based on the election made 7 years ago. The agency should calculate the amount of option B withholding and send it to OPM within 60 days of the discovery of the error. The agency can then offer due process rights to Dave before beginning collection of the retroactive option B premiums from Dave's pay. Option A can also be canceled, but only prospectively, not retroactively. So there's one thing I do want to point out, and again, as I mentioned at the beginning, when we moved into the slides on break-in service and under deduction, employees can incur like huge financial liabilities for these errors with very little recourse. However, the due process mentioned in this slide allows Dave to submit an appeal to his employing agency. And if the employing agency agrees, they can waive Dave's responsibility for the premiums. However, I do want to point out that Dave's portion of the premiums owed, as well as the agency contribution, must still be submitted to OPM within the 60 days of discovery of the error. All right, so how do we fix this, right? So there's not a lot of options, very little remedies, but one thing we can do is to regularly review employee files to ensure proper recording of FEGLI elections. So and I'm not really sure how often agencies actually perform their audits, but if we can regularly review any FEGLI elections or newly FEGLI elections made, it would be really helpful for the employees, because sometimes they go several years. And I've personally seen some that have gone up to 30 years where, excuse me, the back owed premiums are significant. So a regular review would go a long way to help reduce this. In addition, employing agencies can also encourage employees to review their benefit elections on a regular basis. So check their earnings and leave statement, check their EOPF to see if their election form, the most recent one, has been filed, and if that is reflected in their pay schedule. Okay, so having said all that, if you need more information on the FEGLI program, we have a ton of resources for you. Specifically, the program, of course, that we run is we adhere to the law and regulations outlined by the United States Code, Title 5, Chapter 87 here, as well as the Code of Federal Regulations, Part 870 for life insurance. Other good resources include the FEGLI Handbook at the link provided. It's a good resource for agency benefit officers as well as employees. It's quite extensive, and so it's always there if you need it. In addition to that, we have FEGLI booklets for federal employees and for postal service employees, in addition to annuitants as well. Don't want to leave them out. All right, and if that's not good enough, obviously, agency benefits officers, you guys are a great line of and source of information on the FEGLI program, and the FEGLI website, which is located on OPM's website at that link. In addition to that, we have the benefits info listserv, which you can subscribe to. So if you are interested, I'm going to leave this slide up here for a few seconds so that you can take that email address down and subscribe. And if you have any questions about it or they need to approve your inclusion to the list, please have them email the FEGLI@opm.gov mailbox, and I will do that for you. Okay, so I'm going to leave it up here for just a few seconds. Okay. All right. Another great resource is FEGLI. So this is their phone number up top and their hours of operation. So if employees have any questions regarding the status of a claim submitted on an eligible family member, or if there is an annuitant that has, a claim or so forth, they can contact FEGLI. In addition, FEGLI helps with conversion status updates. They help in terms of designating a beneficiary. They handle living benefit application statuses, as well as requests for insurance. Their current mailing address should be on the form, but is also listed in BAL 15-201. Okay, so that brings me to the end of my presentation. Do we have any questions?
Hi, Martine. Oops, that's too loud. We have been receiving questions, so I will start going through some of the questions, and I'll answer because some of them kind of lump together, so or not lumped, or are on the same topic. So I wanted to start off with that. We had a couple of questions on the 2817, and I just want to clarify that, as Martine said, is if someone is just electing basic coverage, and that's the only thing they want, they do not have to complete an SF 2817. By regulation, the person automatically gets it when they come into pay and duty status. So the default is they have FEGLI coverage. If they want to waive it, they need to complete the 2817 and put the sign in the waiver block.
Right. Okay.
And then, go on.
No, go ahead.
And then also on that, we said if someone cancels within the first pay period, they do get a refund of premiums. I was asked, what if they cancel later on, but within the 60 days? They do not get a refund after the first pay period. It's important to remember that the individual may do more than one 2817 during their 60-day time period. Hopefully not a lot of people do that, but the last one you receive is the one that the person has. They cannot, complete another one after the 60 days based upon being a new employee. Someone was also asking on the 2817 why we don't list what each coverage has. It's important to remember that the basic and the option B are actually based upon somebody's salary. So it would not be relevant to put that information in, and obviously it's different for every individual, and it changes. We do list that for option C. We have the 2,500 for child and 5,000 for spouse. And then we had quite a few questions about option C. So option C, as Martine said, it's a spouse and eligible dependent children aged 22. Important to remember that I would be paying the same price for my two multiples of option C, whether I just had a spouse or I had a spouse and 5 kids. It's the same cost. So what do we do if we don't have any eligible family members anymore? So if I only had one, it's me and my child turns age 22, what do I do? The person needs to complete a new 2817 form. They would leave option C blank because they don't want it anymore. They need to sign for everything else because what they don't sign for will be canceled. The effective date for the ending of that option C can be retroactive until the end of the pay period in which that person was an eligible family member. So that would be, agencies can ask for proof. So it can be if the child turns age 22, you can ask for a copy of the birth certificate, divorce decree, death certificate. But an employee would only want to do this if they don't have any other family members remaining. They don't have a spouse. They don't have any other children. And when they fill out that 2817, you process it in HR, and that starts the process to refund the option C premium. So you would work with your payroll provider on that. As someone mentioned, it is true that often people forget they're paying for option C because it's not as pricey as, say, option B, but they can get that refund of premium.
Right.
One of the other things, Martine, if you want to address, people were talking about electronic signature. I think it might help to talk about the BAL that went out this year.
Sure. Something specific in regards to electronic signatures? Or
right.
Just
they wanted
overall?
to know if we had it for forms, which we, and then we had the special protocols during the COVID situation.
Okay. Okay, so we released guidance, and of course, it is, I want to say it's BAL 21-803, I want to say, where we instruct agencies on which FEGLI forms that we will accept HIV and CAC cards, CAC cards, to allow them to sign digitally FEGLI forms during the current disruption to the operations of the federal government during COVID-19. So we released that guidance, I want to say, in May of this year. So it's kind of exclusive to certain forms. So for instance, the SF 2823 designation of beneficiary form is not one of the forms that we would accept a digital signature for. And this is due to the fact that it is it's spelled out in regulation that we should accept original signatures only. There are some more examples of that, but all of that is listed in that BAL. So again, and I'm gonna just quickly look it up just to make sure, because my memory is not as great as it used to be. So it is indeed. Yes, it is 28-803. Okay, and so in there, we also discuss the ability to accept an affidavit in lieu of a death certificate in the event that employees or their family members are having trouble obtaining a death certificate as a part of their verification to process a FEGLI claim. So hopefully that helps. Any other questions, Kathleen, that you see?
Can you repeat the BAL number?
Sure. It is BAL 21-803.
Okay, thank you. There are some more questions. On one, someone was talking about, to find out what coverage the employee has. We are not familiar with the HR systems that you have at your agency, but we can tell you that the SF50 form, when HR processes the 2817, and SF50 is processed with a FEGLI change form. And on that SF50, there is a block that explains what coverage that individual has. So that is a way to find out using the SF50 and the 2817, the different types of HR systems that you have. We are not familiar with those and can't comment on that. Also for people, what we have learned from our agency benefits officers, so the headquarters people that are often in the DC area, is each agency has certain protocols. So If you're not quite sure what to do, after looking it up online and before reaching out to opm.gov, or you can check with your regional or agency benefits officer, because they would have the ways that you would do those refunds that we talked about. They have certain protocols, processes in place for the agency, that the under deductions that Martine talked about, that happens. So agencies should have the procedures for that. And if you don't know it, then someone else in your area, or at least reach out to the regional or agency headquarters office.
Yep.
Someone was asking about the option C, letting people know. It obviously is up to the employee of knowing that they need to, cancel their option C coverage if they don't have any eligible family members left. If you provide, information on your intranet, or if you send out reminders about benefits to your employees, that would always be a good area to add it. One of the other things was talking about why, that we don't have regular open seasons for FEGLI. And we just want to reiterate that it is so different from FEHB. FEHB for health benefits, the benefits change every year. For FEGLI, they do not. Our benefits are actually determined by law. So they do not change. So that's one reason why we don't have the regular open seasons. And for the question about 28-22, a person cannot elect option C on that, and that rationale, option C, remember, is on family members' lives. It's for the spouse and for the eligible dependent children. So the physical that somebody's doing for the 28-22, that doesn't give any information concerning the option C coverage that person has. That option C, it doesn't say anything about the family members' health. So that is just not allowed when someone is electing coverage based upon the 28-22. And Martine, there seemed to be some confusion on the break in service.
Mm-hmm.
Because someone was saying, that somebody leaves their agency, they go from DOD to EPA within a couple weeks, less than 31 days. And can you explain what happens to the person's FEGLI?
Right, so that's not really considered a break in service. So they're going from one agency to another, and it's it's a process. Usually with breaks in service, people may have it could be a number of things, but like health reasons, and they're out for a short period of time where they're in non-pay status. But from agency to agency, that's not necessarily a break in service.
And someone was asking, if there's, do all of the prior FEGLI and options follow the employee to the new agency when there's a gap? And the answer is yes, because as in HR, it might not be the area that you work in, but if I'm working for OPM and I leave and then I go to DOD in 3 years, they would get my official personnel folder to see what I have. So if that's a break of over it's a break of over 180 days, but they still need to know what coverage I have. They're going to get my OPF. And since it's over the 180 days, I can make a new election. And if I don't, I get the coverage that I had before. And that's one of the reasons you would need the OPF.
Oh, just quickly, because I was also looking in the Q&A. So sorry, earlier I said it was BAL 21-803. It's 203, so I couldn't read my handwriting. So BAL 21-203, and that is posted on OPM's website.
Okay.
Okay.
And thank you. Someone added that to find the FEGLI coverage, it's going to be block 27 on the SF50. And the other thing to clarify, again, option C, I pick 2 multiples, but unlike FEHB, I do not have to provide a list of my family members. All of my family members that meet the criteria of spouse or eligible dependent children are automatically covered. So someone said if they got married and they already had option C, the spouse would be covered. And the same with any new child, you do not have to send a list anywhere. We had a question, an employee passes away and they have someone on the designation form from many years ago and they don't even keep touch with the person. Does the family have anything they can do to obtain those funds instead? Martine, do you want to answer that or shall I?
Oh, sure. So the answer is no. So if that's the most recent valid designation of beneficiary form on file, FEGLI benefits will pay out for that. Unfortunately.
Right, so that's another thing. If you do send out a newsletter or something on your intranet to make sure that people keep their beneficiary forms up to date. And as you know, there's more than just the FEGLI form, anything for FERS or SERS or the salary and leave that would be payable after someone's passing.
Okay, do we have other questions?
Yes, there's one about pay and duty, and someone's talking about FEGLI defining it. All the things that we are talking about are actually done by OPM, by our law and regulations. And leave without pay is not included in the definition of pay and duty status. So that's important to note.
Okay, we have time for a few more questions.
Let me. Because this, someone's asking for options B and C, and if employee elects multiple of 2, it doubles their basic coverage amount. So what's the purpose of multiple 1? Wouldn't the multiple of 1 amount be the same as a person's BIA? So the key thing with that is, yes, option B is based on your multiples of salary. But you remember option C is not on the employee's life, it's on their spouse's or child's life, and that's the 2,500 or the 5,000. So a great resource on our FEGLI website, we have the FEGLI calculator, that if a person's trying to figure out that they have a certain dollar figure they want to get to, they can use that, try to do the basic and then add up the 10,000 option A and then try different multiples of option B. So also regarding break in service. So yes, if someone has been away from federal service, they should be put back into their previous amount of FEGLI coverage. So that would be if it's, the less than 31 days, less than 180 days, over 180 days, they are allowed to make a new election. But if they don't, they get the coverage they had before.
Right.
Again, option C, if there are no eligible family members left, the refund should go back to when the last eligible family member either quote aged out or passed away. So like if it was a spouse, so it can go back, and agencies should work on getting the proof from the employee, so you would know how to do that.
Okay, we have maybe a couple more questions. Time for it.
Here we go. Is there still a cost per pay period after we retire for FEGLI? Do you want to do a brief thing of how it works in retirement?
Well, that's a
well, no, just saying yes.
Can of worms. But
okay, no, I was just going to say yes. People have to pay for basic. You're just paying it monthly rather than biweekly.
They do. And, yes, that's correct. Yes. So that sounds good. Okay, maybe one more, Kathleen.
Someone's asked, is it okay to request a 2817 for basic as a practice for new hires?
Well, no, I wouldn't recommend that, because again, they're automatically supposed to receive it. So I wouldn't get into the practice of requesting it. It's just, be mindful that that's part of the process of onboarding a new employee.
Right, and just in the past, OPM had required like a dummy one did up, and we stopped that. So
yeah,
we do not encourage it, because it would be the 2817 on file with the declination means that the person, waived the coverage.
Yeah, which is not the case if they're new. Okay, so so that will conclude this presentation. If you do have any questions that you feel like wasn't answered here, feel free to send it to FEGLI@opm.gov, or you can also send it to the Bodo team. Kathleen, do you have the email address? Can't remember off the top of my head.
Benefits@opm.gov.
Right, so that's the best place first, benefits@opm.gov, or also FEGLI@opm.gov. So I want to thank you guys for joining me today. I'm going to turn on my camera really quickly to bid you a farewell and to remain safe. I appreciate your time. So thank you so much, and have a great rest of your day.